Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Today is Wednesday, October 12th, and we just had PPI data reported this morning. We have FOMC minutes later today at 2 p.m. Eastern, so that'll be coming up in just a few hours. And then we have CPI, which is the big number tomorrow morning at 5 or at 8:30 a.m. Eastern. And CPI is going to be the biggest deal, and we will obviously dig into that in a second. But looking at PPI numbers, they came in above expected. So previous -2%, forecast 0.2, actual 0.4. So PPI is signaling that CPI could potentially end up being higher, considering the producer price index, which is the price for producers instead of consumers, is increasing, which will eventually mean technically it gets passed down to consumers via price inflation. Because if producers are paying more, then they still need to maximize profits, et cetera, et cetera. So not a good sign for people. The inflation is coming down crowd right now, and it's definitely unfortunate that we had a PPI spike after we were coming off the highs. So not a good sign for CPI tomorrow. And of course, we have FOMC minutes at 2 p.m. today, so that is in about 90 minutes. So that'll definitely drive some volatility as we close U.S. markets and head into CPI tomorrow morning. So looking at sentiment, both Ethereum and Bitcoin under 50. Most assets are bearish or neutral to bearish to a certain degree. We have a few outliers, of course. Uni still chugging along, but everything is very bearish from a daily perspective right now, which is not positive going into CPI. I will say Bitcoin daily sentiment, in this bearish range has been holding up, been making higher highs. So that's definitely a positive. We want to continue to see that, and hopefully sentiment ends up lifting higher. Hourly sentiment barely pushed bullish, but of course we did see some of that action last night, but not entirely promising as we can see it now. Ethereum very much unchanged, neutral to bearish, rejected at 50 again yesterday when we were talking, so not positive there. And then of course we have some hourly sentiment spikes here, but nothing really confidence inducing. Tweet volume down 25% for Ethereum, down 10% for Bitcoin. Trading volumes are down as well. So not positive for crypto heading into what is expected to be a volatile 24 hours. So looking at Bitcoin, what we discussed yesterday, pump into the evening before a dump in the morning, happened again. This Darth Maul wick right here, I'll try and zoom in as best I can, but this was right when PPI was introduced. So I'm expecting very similar for CPI. I have a feeling we'll have a nice Darth Maul wick with heavy wick top side, heavy wick downside with a small body. That's what we call a Darth Maul wick. And depending on CPI data, I have a feeling we'll see very similar. But we did end up seeing that pump into the evening and dump after the highs. We saw it, equally again that on Tuesday night. We saw it also Monday night. We saw it Sunday night as well. So that's 3 pumps into the early morning East Coast. That's 3 in a row. Getting less and less each pump, interestingly enough, but what we pointed out yesterday did happen again. So if you were long into the lows yesterday, decent trade as it was, quite literally Monday, Tuesday, and now Wednesday. So interesting thing there. Just wanted to point that out. We'll come back to Bitcoin as we've been using the S&P 500 as our weather vane. Let's go ahead and make this chart a little bit more easier to read. Basically, we're at the lows of September right now. Obviously this has gotten a bit weaker. The downtrend has gotten weaker. It's slowed down. It's consolidated. We're now sitting in a very tight range for the S&P 500. So obviously, based on CPI tomorrow, I think that's what everybody is waiting for, a trigger for longs or shorts. And of course, if CPI is a miss, shorts look good. If CPI is a beat, Longs look good. There's obviously a lot of liquidity for the S&P 500 all the way up to 3730 and 3760. So if CPI was good, we would end up seeing that break higher. If CPI was bad, we would end up breaking lower. And of course, we're below the June lows, but we've discussed this number many times. The 3550 looks really good for initial supports, which could then turn into resistance. And then 3200 is looking good for what the potential range would be. So if CPI is bad, and the fact we don't have another FOMC until either the end of this month or next month, I have to double check on that. But CPI is bad, we could easily start messing around in this range. We have some liquidity at 3366 and then not much else. So if CPI is bad, I would expect us to at least touch 3550 or begin the trajectory down into that range, where we would probably end up ping-ponging around for consolidation moving forward. I really don't see the S&P below 3200 in 2023 or 2024, but bad CPI print could definitely set us on a trajectory there. And of course, a good CPI print could set us on a trajectory at least to form a range between 3600 and 3800, which would then be potentially where we end up consolidating around. So we could end up doing this if it's bullish. I mean, if CPI is a beat, and then if it's bad, I would assume we end up doing something like this. So it's as with all big data points. That's why I mentioned the Darth Maul wick earlier. Very, very difficult to trade. So it's always better to, if you don't have a really good bet that you feel great about, make sure your stops are tight. If you do have a good bet, if you don't have a great bet, wait for the data to come in, wait for the market to open, and then place your bets after, because there's going to be an hour of just nonsensical volatility from 8:30 a.m. to 9:30 a.m. And then the market will come in and right itself, and a bunch of shorts will come in or a bunch of longs will come in, depending on the data. And of course, if we hit the expectations, then it could end up just being neutral. Then we just continue to range in this smaller range that we're in until a larger catalyst occurs. I have a feeling that the data is going to be very pointed in one direction or the other. But if it's neutral, meaning it's purely at expected value, then we could just end up having a massive Darth Maul wick without any real action on either side. So, interestingly enough, we've been in a very tight range to the S&P 500. This was the Monday open. We've been, making lower lows. Well, we made lower lows into yesterday's morning. We've been meeting the lows since then. And basically, this is ugly, and it's a bit not entirely helpful, because I don't think a lot of trading is going to happen before CPI tomorrow, potentially maybe into the evening, depending on FOMC minutes. But if you firmly break below 3576, it's 3550 and or lower, because we've seen a bunch of wicks here, no firm breaks. And then you basically have to break above 3624 to end up getting higher. And of course, we did that once yesterday, but it was a quick deviation above the 200-day moving average on the 15-minute candles, and clearly, nothing happened. So basically, this is the range for S&P 500. If we break lower, crypto should follow. If we break higher, crypto should follow. But I have a feeling we're just going to end up ping-ponging around here. We could see the lows again this morning. As you can see here, lows at 6:30 a.m. Pacific, lows at 12:30 p.m. Pacific, and then pump. So we could get lows again heading into lunchtime, and then maybe we rise out, and then we continue to be volatile into the day. But we do have right around here is when the FOMC minutes will happen. So maybe we dump into FOMC minutes, maybe this volatility occurs. Of course, I don't really know where price is going to move, because the two data points that we have upcoming are unknowns, i.e. FOMC minutes and CPI. So it's going to be very difficult to predict where the price action is going to occur. That's why I'm not really going to do that. I'm not trading this right now. I think you should only be really looking for scalps and short-term moves. And of course, value is tough to suck out of a market where Bitcoin's trading in a 2% range and the S&P 500 is trading in a 1.3% range. not much money to be made unless you're moving with size and moving very accurately with your scalps. Therefore, sometimes it's better to just chill out, preserve your capital, and wait for a good-looking trade, which will come off of the data that we just discussed. So looking at Bitcoin, very similarly, to the S&P 500, I think we can draw the range up here. Met the lows very early, met the lows same time as S&P 500 moved higher, met the lows again with that Darth Maul wick. Then we recovered again. Now it looks a little ugly. So, and of course we have FOMC minutes in about 80 minutes. So I expect this to very much mirror the S&P 500. And of course, if we break below 18.9, then it's very easy to imagine that. I'm sorry, I'm just waiting for this load. If we break below 18.9, it's very easy to imagine 18.7. And if we can break above that level of my apologies here, 19.2, then you can start talking about higher levels. But we got a bit ahead of ourselves yesterday talking about potentially 19.7 and how decent this move looked. And of course, 19.2 has just been the where things are going to get stuffed since Tuesday. So you got to break above 19.2 to move higher. You got to break below 18.9 to move lower. Else you're just really trying to scalp as best as possible throughout this range. RSI to me looks disgusting as the stock RSI. I would not be surprised to see Bitcoin at 18.9 again today to very much mirror the price action we saw yesterday, which was pump into about 10 a.m. ET and then dump around 11, which is coincidentally when the FOMC minutes are released. I'm talking Pacific time. So what you're seeing on my chart is Pacific time, but all of the big economic numbers are obviously come out in Eastern time. So as for Ethereum, don't even need to draw a range here. 1300 is the number for what it needs to break higher, and then of course it needs to firmly break below 1275 to move lower. Obviously, deviation, wick, and all that fun stuff. But Ethereum looking a little bit stronger than Bitcoin. Not much stronger. But definitely, I want to say this is a bit wider of a range. Bitcoin is literally trading in a 2% range since Monday. This is 2% just since that's Monday afternoon. So Monday open, it's trading in about a 3% range. Yeah, a little 3-4% range. So Bitcoin's trading in a 2% range since Monday open. Ethereum nearly 4% range. So Ethereum, if you wanted to scalp this around, probably a better asset to try, but it's probably not going to give you anything easy considering this volatility after the open. Does look like we may end up meeting these lows, but you have to crack below the 200-day moving average and the 100 moving average first. So it's going to be probably pretty volatile. Maybe we do something like this, tag this POC, head back down, and then maybe end up higher, or we end up heading lower from there. So again, I'm just kind of brainstorming based on, typical market patterns, but it basically, just know your levels, and obviously shorting 1300 seems to be working. Longing 1275 seems to be working. Same for shorting 19.2 and longing 18.9. But again, FOMC minutes, 80 minutes, CPI tomorrow morning. So again, I just want to make sure everybody's aware. Very difficult trading over the next 24 hours, and it may be in your best benefit to wait to the daily close today to see how everyone reacts to FOMC leading into CPI. Probably get some good scalps there, and then your best decision is wait until CPI is over, and then make your trades. But if you really do feel that you have to trade in one direction or the other, you really feel like CPI is going to be a miss or a beat, the best way to do it is park a trade that you feel is weighted towards the outcome that you think is going to occur. So if you think it's going to be a miss, you place a heavy short, and then you place, a decent sized long. That way you hedge your shorts and you only lose a little bit in case things end up going to the long side. Then you can close your shorts and take your money on the long. But the difficulty with that is, of course, these Darth Maul wicks where we move in such quick directions that you end up either closing one side early, or you end up at the end of the day with a small win or a small loss because it ends up just being volatile back into the range. So, there's that's why it's so difficult to trade. There's a way to trade it, but you have to be very quick. You have to be very timely, especially if you're manually executing these trades because of the volatility and how the order books are going to look within the first 5 minutes of this data coming out. So sometimes it's best to observe, wait for the market to open, because if you waited for the market to open here, the market opened down and then it immediately shot back up because it was holding these levels. So that was a signal to traders in the market open, hey, I can get a quick scalp long. Now, it wasn't a massive scalp long, but if you bought low and that you had a 0.5%, so minus fees, you're still taking home some scratch on the volatility. But of course, we would prefer more volatility, and I'm hoping that CPI ends up bringing that to us. So good luck, happy trading. See everybody tomorrow. We may do a special session special early morning session, depending on how crazy CPI is, but that's the main number. Keep a lookout for that, and good luck this evening and tomorrow.